Welcome back to grade 11 accounting. In this video, we want to look at the preparation of the balance sheet extract, that is the balance sheet section, whereby we are going to only prepare the equity and liability section of the balance sheet. So remember, our balance sheet is to balance. If it's a full balance sheet, it has to balance. Remember, it obeys the accounting equation, which says our total assets is equals to owner's equity plus our total liabilities. So we are going to see that the other part of the balance sheet, which is this part of the accounting equation, is the one that we are going to look at according to this video. So this is just the second balance figure that we are just going to calculate. So going to our question, it reads S to Ben and S Collis are partners in this business. The financial year ended on 30 September 2019. So 3.2.1 reads complete the current account note for the financial year ended which is 19 marks, and then we've got 3.2.2 complete the equity and liability section of the balance sheet on 30 September 2019. But basically, if you look at the first part, we did prepare it in the last video. So we have got it here in this video again so that we can refer back in terms of the balances of the current account. And then we can be able to now complete our section of the balance sheet, that is the equity and liability section. So this part has got 17 marks. So we go to the other section to see what we have in terms of the part that we want to prepare, which is the balance sheet on 30 September 2019 on the equity and liability section. So this is our equity and liability section. So you'd see that according to our last video, we did the current account notes, which is this one. And then these are the final figures that we got in terms of our current account balances, which is the first column is for Ndubeni and second one is for Kolisi. And we got the figures as 13,500 here and 3,000 here. So we are going to go to the question now to see what is the question saying about the information that we are given in the question. So you see that a continuation of the question again is starting from here where we've got information where we are given extract from accounting records on 30 September 2019. So we are given a list of balances that you need to go through before you answer the question. You are also given a further additional information from information B to information E that you need also to go through before you start answering the question, especially the partnership agreements, which is stated on information C. The partnership agreement is very important, very vital in the operations of a partnership, as it states the terms and conditions on which the partnership is going to go about. So you need also to go through that. So going to our other section now to see what is the first item we are supposed to look for. We can just refer back to our answer section and see what is required. So if you come here, you'll see that this is our balance sheet on 30 September 2019. So this is equity and liability section, whereby we are given owner's equity. So we start by the owner's equity. So owner's equity, that's where we're going to have our capital, and also we have our current balances. And then we can add to get the total for owner's equity. So so here we can start by putting our capital, whereby we refer back to the question to see the capital balances for the two partners, and then we add to get the total. But obviously, this information, we get it in the list of balances. So here we are seeing that our capital balances are here. For Ntubeni, we've got 350,000, then for Kolisi, we've got 450,000. So basically what we're going to do, we're going to add to get the total, where we're saying 350,000 plus 450,000, then we get the total. So we come to our answer section. On our answer section, we are saying capital, and we are saying in brackets 350,000 add your 450,000. Then we add the two there, you're supposed to get your 800,000. And then we go to current accounts. And then these are the balances that we have here that we need to just to take from the previous current account that we prepared. We have got 13,500 and a negative 3,000. So basically, we add the two. It's going to remain as 13,500 plus negative 3,000. And obviously, a negative and a positive will give you a negative. So 13,500 minus 3,000. So basically, we are going to get uh, the total, the final answer that you're supposed to get there for current is going to be 10,000. 10,500. We can just maybe try to correct here. It becomes 10,500. So this is what we have in terms of the total for current account. So we can go back now and just summarize that in our balance sheet. So here we are summarizing it as 13,500 minus 3,000. And you get your 10,000. So this is what we have. Then we can now add now. We can now try to, remember we said 10,500, sorry, we can just correct it again here. We said 10,500 is other that we got there, which is 10,500. And if we add the two, 800,000 plus 10,500, we're going to get 810,500. So this is the owner's equity balance that we have. Then to go to non-current liabilities, obviously we are going to look for the figure for loan representing our non-current liability. So we go to the list of balance again, and we are seeing that loan is here for Bani Bank. It's a question mark. So if it's a question mark, you can go to additional information to see if got any hint of finding that loan balance. But if you go through, you said there's nothing that we can use to calculate this loan balance. So if that scenario, it means we are going to find it as a balancing figure. In other words, we are just going to leave it blank and come back to it and calculate it as a balancing figure. So it means our loan, we are leaving it, but we have loan, it's Bani Bank. So we leave it blank, then we go to current liabilities. We list the current liabilities that we have, but obviously under current liabilities, we are going to have the figure for trade and other payables, trade and other payables as we abbreviate it. Then we go to our list of balances to check for trade and other payables. Remember, we are going to have the trade creditors, creditors control as the trade payable. And then other payables, you are going to look for accruals of expenses and prepayments of income. So we start with the creditors control. Let's try to check it. You see that is here, 60,500. 60,500. Then we check for accruals of expenses. We are having accrual of expenses here. Accrued expense, we've got 8,000. We have 8,000. Then we check prepayments of income or received in advance of income. Income received in advance, we have it here, which is 7,500. So we're going to add the three, 6,500 plus 8,000 plus 7,500. So we go on under section and add that to represent our trade and other payables. So we come down. So in brackets, we can just summarize the working whereby we are saying 60,500. Add your 8,000. Add your 7,500. And then the total that we are supposed to get is 76,000. So this is what we have. And then we can look for other current liabilities that we can have in the question. But if you go to our list of balances, you'll see that we have got a figure for bank there, which is a credit balance. If you see here, a bank is a credit balance. So whenever the bank has a credit balance, it means it's a bank overdraft. And but if it is a debit balance, it means it's a current asset. We have to put it under current asset as our bank, under cash and cash equivalents. But if it's not, if it's a credit, we can take it as a bank overdraft and it goes under current liability. So in this case, we are taking it as a current liability, 5,500. We come here. We are saying bank overdraft. And we are saying 35,500. Then Having done that, now we go to extra information to look if there's if we have any other current liability that is mentioned there. But if you go to second from last, which is D, information D, 50,000 rands will be paid on the capital amount of the loan in the next financial year. So if you see part of the loan being paid in the next financial year, it means it's a transfer that is transferring uh, from the non-current liability of loan, and we take it as current portion of loan, and we transfer it to other current liabilities as current portion of loan. So for current portion of loan, which is 50,000. So we come here. So here we are saying current portion of loan, which is 50,000. So it means we've exhausted our current liability since our space is also occupied there. So we can now get total current liability. So we are saying 50,000 plus 35,500 plus 76,000. And then we are going to get to 161,500. So here we are getting 161,500. So now total equity and liabilities, we need to go again to see if we can get the figure for total equity and liabilities, because we cannot find it at this point because we don't have the figure for non-current liabilities here since the loan figure is not there. So we can go to Excel information to see if there's a hint that can give us the total or the balancing figure. We come here. We are told at the last point that total assets for the year is 1,170,000. So if you come back to our explanation that we did at the beginning of the question, we did explain about this relationship that is there according to the accounting equation, whereby we say total assets is equal to owner's equity plus liabilities. So the figure for total assets will represent also it would be the same with the figure that we have for owner's equity plus liabilities. So if you come here, we are told that the figure for total assets in the question, we are told that the figure for total assets, let's just try to see. Right, we go to the statement that we have in the additional information, which is saying total assets for the year amounted to 1,170,000. So this is the same figure for owner's equity plus liabilities. So we're going to take that figure 1,170,000 and put it under and put it as our total equity and liabilities here, which is 1,170,000. Then after putting it here, we are also it becomes easier for us to find the figure for non-current liability, whereby we are going to just make it non-current liability sample the formula there, then it becomes simple for us. So what we are saying is to get this figure for total equity and liability, we say equity plus liabilities. Owner's equity plus liabilities. So it is like this, owner's equity plus liabilities. But in liabilities, we've got current liabilities and non-current liabilities. So in other words, we are saying owner's equity plus non-current liability plus current liabilities. So in this case, it's giving us 1,170,000. So we can be able to find the figure for non-current liabilities by making it the sum of the formula. So when you make it the sum of the formula there, it becomes non-current liabilities goes to 1,170,000. And then we take owner's equity, the other side, we subtract, becomes negative. Current liabilities becomes negative again. So these figures, we have them in our balance sheet. So we come here, we see that owner's equity, we got 810,500. So we're going to subtract 810,500. For current liabilities, we got 161,500. We're going to subtract 161,500. So we come in, we are now saying, let's just try to see, we are now saying it is equal to 1,170,000 minus owner's equity which is 810,500, minus current liability, which is 161,500. Then we can be able to find the figure for non-current liabilities, which is 198,000. 198,000. So let's just try to see. So this is the figure for our non-current liabilities. So this is the figure that is going to come here. This is the same figure that is supposed to come there. So we are saying 198,000 will initially come here. And you see that other than only have loan, so it means automatically means this figure is the same figure that is supposed to come here. So this is what we have done, is according to the preparation of a balance sheet extract, particularly on the equity and liability section. Thank you for listening. Let's subscribe and share. Let's share the link to our colleagues who are doing grade 11 accounting. As for this video, I'm signing out. We'll meet again in the next video.